let's pause there because I have a lot of questions.
Maybe retail users are not the best to determine what things should cost. I think there's also evidence to maybe the fact that maybe VCs are not the ones to say how much things should cost either. But
FTX. What is Polimec about? What's the core philosophy behind it?
I think that's what we want to do with Polimec, is make sure that fundraising can be accessible to anyone.
And when is the launch going to be? Any update on that?
It's blockchain, so it will be soon.
All right, thank you for tuning into the TEACHMEDEFI podcast again. Today, I'm excited to say we got another interview episode, and we got Casper here from Polimec. Hi, Casper. Thank you for being here.
Hey, Sahil. Nice to be here.
Sweet. Excited to talk about things like decentralized fundraising and all that, and what Polimec is doing, as you're obviously a co-founder of the project. And we met you guys at Polkadot Decoded, did a short interview there with Flavio. But before we dive into all that, can you tell us a bit about yourself and your journey before crypto, and then maybe also in crypto, because you were the CFO of the Web3 Foundation and now you're co-founder of Polimec. To give us an idea about your journey.
Yeah, definitely. Well, let's see how far we want to go back. Not that far, but yeah, I was from 2019, the CFO for Web3 Foundation, all the way from I think when I joined, Web3 Foundation was 20 people, I think. It was before, it was not that early, because obviously the foundation did a fundraise in 2017, but it was before Polkadot was live. Remember, we had a lot of discussions on Kusama and the launch of Kusama, going through also with the launch of Polkadot, and the whole switch from being sort of pre-product to actually having the product out there and starting to be able to actually see the initial phases of adoption there. So that was a very interesting journey. But going further back, I think I have a financial background. I started out in my early career with KPMG as an auditor, and then been in various financial leadership positions within sort of compliance, trading, commodity trading, in quite large corporates, and then this opportunity came in crypto, which is sort of a bit of a, you can say, I looked at it from, at the time, I think in 2019, when I was considering it, was sort of it's a bit of between, I had just been in commodities trading for 6 years, and also did a startup, and I was it's a startup, it's tech, and it's something that is not completely off from the trading environment as well. So it's fast moving. There's a lot of things changing, and you have an opportunity to make a difference. So that was sort of what drove me towards that opportunity, and getting much more deeply involved into crypto.
Cool. That's an interesting background. Yeah. But I think it also resonates with a lot of people that stumbled upon crypto and Web3 and got a bit more passionate on that side. And it's about finding the right direction into it. And I think for me, it sort of came both from the startup that I did was very much in the privacy space, around the implementation of this GDPR regulation in Europe. So got me very much into the whole privacy space. And I think one of the learnings was a bit that when you talk to a lot of companies about privacy, they have no idea. And they don't know how the data is being traded around and flowing between different platforms and whatever you do to make an online Web2 business. And that was actually one of the things that also drove me towards crypto and blockchain, and the idea of Web3, because the idea of Web3 is actually a way of solving that problem with how can you actually interact
online without necessarily having to give up a lot of data that you're not in control of. So it's a way of actually enabling that you can actually give control back to the user rather than having control with the big Web2 companies.
Yeah, absolutely. GDPR, that sounds like you must have had a lot of headaches during that time, or it sounds challenging.
It was interesting in the sense of that it was sort of, I think, one of like quite a big implementation for any company, I think. And there was a lot of discussions back and forth of what does it mean? Is the regulation clear, or how do we do it? What is necessary? And I think it sort of ended up in being like there were two camps of like there was a lot of businesses that were like, this is really important for us and we use a lot of money on it. And then you have the other ones that are like, we don't really understand it, we don't really care, and we don't think it's going to impact us, so we just look the other way.
Yeah.
And a lot of buzz was around it, and I think what we've seen over the past couple of years is like that it's found a level where I think most people are comfortable with what do you actually need to do. And I was at a conference like a month ago or something where there was a lot of discussion about MiCA, the European regulation on the markets in crypto assets.
Yeah.
And that was sort of for me, there was a lot of buzz the same way as what there was around the GDPR. And a lot of people have a lot of ideas about what it could do. But I think that's also one of these things. Let's see where it lands. But I think it's one of the nice things of seeing where regulation actually is taken into account, that they put more of a framework, and then actually the industry will figure out where do we actually land in the end. And hopefully, I think that's when we look at MiCA in its current form, I think that's actually something that's quite positive for blockchain and crypto in Europe, that we have more clarity of what we can do, but they still actually embrace the fact that if you actually do proper decentralized products, then you are actually outside of the remit of the regulation, but that they only regulate what is necessary to regulate. And what you can actually do with tech is that make sure that if you do the right implementations, then you can actually do something that's still within what you can do without actually clashing with regulation.
Yeah, I think clarity, is a big one, especially as you have a lot of ambiguity in the US around these things, and it's been arguably driving the industry abroad at this stage to a significant degree. So curious how Europe will hopefully not fumble that ball and do well by this industry. Regulation is a big topic for Polimec to an extent as well. How about we dive in there? What is that project about? What is Polimec about? What's the core philosophy behind it and the idea?
No, it's something that's been I was thinking about for quite a long time together with my co-founders of what can you actually do to move crypto in a way that you stay very true to the Web3 idea of decentralization and that you make sure that the user is in control, but also that you sort of look at what are the regulations, how can you actually implement something that you can follow the ideas of where the regulators want to go, how do they want to actually put in some checks and balances in crypto and blockchain. And one of the things we were looking at is a bit of the fundraising area, because, we saw 2017 ICO hypes, and that there are good and bad things about that, right? I think the good thing was it brought quite a lot of people into crypto, but on the other hand, it's sort of like it was also like what pricing of these rounds, how you do it, like KYC, non-KYC, what can you do, where can you take the money, who are you allowed to fundraise from, and so on. It was basically a not a free for all. I think that's wrong to say it like that, but at least it was a lot of different implementations and a lot of different ways to do it. And what both
I had experience from during my time at Web3, but also Luca and a big part of the team that we have at Polimec as well has experience in the private fundraising in blockchain and crypto, and was like, how can we take this private fundraising and make it accessible generally to the normal blockchain user, rather than saying that these early stage fundraising should be something of like, need to know someone who knows someone that knows someone, and then you need to go here, and then maybe you can participate. Where I think it's much more interesting of actually making a way that you can make that you can make this accessible to anyone. And I think that's very much the ethos of Web3, to make sure that anyone that actually wants to use these platforms can actually be a part of it. They can be a part of the community, and the community around any kind of blockchain protocol or blockchain product is very much, it's going to be the users in the end. And I think what we've seen since 2017 is that there's been a lot of VC funding for a lot of projects, which is good because it brings in quite a lot of capital resources into the blockchain industry, which is great. But it's also been leaving out the community aspect, because the community ends up being the ones that get in very, very late, and then you end up with this that the more retail users or the end users of the product ends up being the ones of like, but it's just VCs dumping on me and I'm not sure what's happening, right? So they get in at the very end, all the users, and I'm not sure the best way of getting your users in to get them in at the very late stage. I think the users can give you a lot of feedback and give you, and they should be a part of the journey as well. So I think that's what we want to do with Polimec, is make sure that fundraising can be accessible to anyone, both the end users and the more retail users and the small community users, but also VCs and professional investors, so that all these three different type of participants in fundraising rounds can actually participate and for the benefit of the project raising funds, because I think each and every one brings different value to the project.
Yeah. It's super interesting. You mentioned, I would say there is an ambivalent sentiment towards VCs or the funding mechanisms that are currently prevalent in the space. I think to an extent it was interesting as well, or is to VCs to invest in tokenized business models, because you tend to become liquid more quickly than if you would invest in a traditional startup and hope for an exit later on. So you could kind of like get a return more quickly. But at the same time, it has led to a sentiment of dumping on retail users and the likes.
I think it's one of these things where you are having a bit of a, for me, it's sort of a bit of a clash between like the investment side of things and the actual users, because in the end, to have a successful product, you need to have users of the product. Because everything else is, it's not sustainable over time, right? So I think the most valuable participants you have are the one that's going to use your product in the end. And I think that's sort of where we probably need to go when you're looking at blockchain and crypto in itself, of like, need to make a lot more useful products for the users out there. I think 2021 we saw a DeFi summer and a lot of new products come up, and some of them we still see are around because they're useful, and some of them just were there for 2021 and then they sort of disappeared again. And I think that's sort of, we need to find what are the really useful use cases for crypto and blockchain.
I had these questions for later on, but actually it's so fitting right now. So I'd like to expand on what you just said. I mean, do you think part of the problem is also not knowing how to evaluate these things? Because in terms of DeFi Summer, there was arguably, you could say, there were a lot of metrics and signs that this is becoming adopted and is being considered perhaps useful by a lot of people. If you look at the main known metric of TVL, total value locked, it was increasing, and these protocols were sprouting up. And I'm just wondering about metrics and valuation, sort of like these concepts tend to be straightforward for companies. You look at profitability, liquidity, assets and liabilities. But how do we assess performance of projects in this space, like of decentralized protocols and applications? It seems to me many traditional finance tools don't seem to be flawlessly applicable to Web3. For example, if you look at multiples, what do you really look at? If you look at market capitalizations and protocol revenue, for example, you could get to the conclusion that most projects are highly overvalued. Is this actually accurate, or is this not the right way to really quantize it or quantify it? How do we get a better grasp on relevant, meaningful metrics and ways of evaluating them so that we can understand what is actually working, what is being adopted, and so that we can compare competing solutions to each other and hopefully allocate resources more effectively to one solution over the other. And essentially, like you said, know when an application is being successful or sustainable and when not.
Yeah, I think it's a really good question, and I'm not sure I have a good answer to it, because I think it depends very much on the product.
Yeah.
And I'm very specific when using the word product, because I think it's one of these things that we don't talk too much about when we talk about blockchain and in crypto, that we talk about protocols and we're talking about dApps and we're talking about smart contracts. But in the end, it's like, you should have a product. You said, like, what are the things that you're selling? Why is it that you should actually use whatever it is that you build, right? And as such, for me, that's a product. And I think we need to go there where we're looking at the product and then see what does that make sense? Is the product usable? Is the product something that's being used by the community? Is it something that is getting more use, or something that's useful for anyone? And I think that would be very different from product to product. Also because there's so much innovation going on in the blockchain industry that I think it's very difficult to just say, let's just measure TVL, and then that's the universal measure of what is a good DeFi protocol. I think it depends very much on what the protocol actually does. And the problem is, if we focus very much on one metric, then it tends to drive developers towards developing something that sort of caters for that specific metric, which you should do something that caters for the product you want to sell, not for having a good metric, right? And it's one of these things we discussed it very much also internally on the Polimec team, because it's a part of what we do when you do a fundraise on Polimec. Then it's a permissionless protocol, so all projects have a possibility to use it for fundraising. We are not the adjudicators of what is a good project or a bad project, but we actually decided in the end to put that out to the community. So what we have on Polimec is a decentralized due diligence or evaluation mechanism where anyone can go in and actually evaluate the project raising funds. And we had a long discussion of like, hey, how should what is a good evaluation? And I think in the end, we ended up in, is the project able to raise the funds that they're asking for? And then it's up to the community to say, what are the things that they think is the most important thing? So for us, it's actually crowdsourcing all that information, making sure that actually that information is accessible to anyone that participates on Polimec, and make sure that when then you evaluate, hey, do I actually want to participate in fundraise of that project? You have access to a quite wide range of decentralized due diligence from the entire community. So if you're very much into DeFi, then you look at that part. If you are crypto, if you are a blockchain engineer, then maybe you go more into the tech. So I think that's the way of looking at it, and basically try to crowdsource as much information, because in the end that is what needs to be looked at, is specifically on what's being built, what's the product, and how do you actually best evaluate that out of the contents of the product, and not just for any kind of vanity metrics that we can end up having in blockchain.
Okay, yeah. Interesting. Yeah, we went down a bit of a rabbit hole there. Let's bring it back. So let's go deeper into that. Like, what is the product? How does it look on Polimec? Who would the users be, and how would they use your platform for fundraising or for contributing funds to a project that is raising funds?
Yeah. So for us, we have a few, you can say, key users. First of all, you have the Web3 projects that needs to raise funds. So these are the ones we call issuers of tokens, and then you have the participants, which is in the end both venture capitalists or institutionals. So it could be venture capital, it could be family offices or things like that are in the business of participating in these projects. Then you have the professional participants in crypto. And then, of course, you also have the retail user of the product, and we bring those different users together on Polimec. As you say, it's a completely permissionless protocol, in the sense that anyone can come in and say, "Hey, I would like to do a fundraise," and the only requirement that you have is that we want to make sure that we can do regulatory compliant fundraising. So what we have is that any user on Polimec needs to have what we call a credential. So so the whole technical definition is a verifiable credential that is anchored on the Kilt blockchain, and for that we can actually get the KYC issuer to issue a verifiable credential that you keep in a specific wallet, so that when you actually interact on Polimec, we can verify that you are KYC'd by the KYC provider, but we do not actually gather a lot of information about you as a person. We can only see that you're actually KYC'd, and the project can then say, well, I don't want American citizens, so then you can ask the users to disclose, are they a US citizen or not? And that's the only information that we and the project raising funds actually has. So the nice thing is that you go through KYC once with the KYC provider, and then you can participate in any fundraise on Polimec subsequent to that. So that's the requirement to actually be a part on the fundraise. That is also a requirement for the issuer. So let's say a project wants to raise funds. It's always a question of like, so who are the people behind the crypto project? Because sometimes it's some nice NFTs or similar stuff to show the team, but we can actually provenly say that there has been done KYC on the team, and that this is kept by the KYC provider. So there's full traceability back and accountability of the persons that are behind the team. And of course, in that, it's important to have the right KYC provider. Yeah. And that we worked with. We worked for it's almost 18 months now that we work together with Deloitte, one of the big four audit companies, and they are offering this decentralized KYC product to everyone globally. So we are now very, very close to being live. And that anyone can actually go to a Deloitte website, get their credential, and then they can actually connect to Polimec and participate in any kind of fundraise. Okay. In a fully decentralized and Web3 native way.
Right.
So that was very much sort of like who gets in, right? And then it comes to, so how do you participate in a fundraise? And you can participate in a fundraise in a few different ways. So we talked about the evaluations, that anyone can evaluate a project. Yeah. And that is actually an incentivized mechanism. So you bond your Polimec tokens, and if you get it right, then you'll get rewarded in the project raising funds in their native tokens.
If you get it wrong, we will take away some of your Polimec tokens. So it's not like you could just say, this is the greatest project ever, but you actually need to do some work to make sure that you actually do a proper evaluation, but then you also get a proper reward for it.
Right. When I jump in there, before we dive more into that, because that's also super interesting, but just to cover the point you just said about who gets in. So you do get a verifiable credential from, let's say, Deloitte, but the idea is that there would be, I think with Kilt, because we had Ingo on as well on the podcast, that you have these different issuers of credentials. I forgot what their name is in the Kilt ecosystem, but attesters, I believe. And you choose whichever. You go, okay, I'll do KYC with this. I'll get that credential on chain. And then I have it on the Kilt blockchain. And then if I want to show to someone my credential, I can show it, but I can disclose, like you said, I don't have to disclose all this other information of me. For example, like my whole ID, I don't have to show when I want to prove that I'm over 18. I can just show the part that shows this guy is over 18 because it has been issued to him on the chain by an attester.
Exactly.
So that in itself is super interesting, and to see that you guys are implementing it for decentralized fundraising. But I also found it interesting that you said the people who want to raise funds, the projects that want to raise funds, they will have to do that as well. This sort of thing, because in crypto, often it's not uncommon that you have anonymous people or pseudonymous, where you, like you said, you have a little NFT, you have a little ape or something, but you don't know anything else about this person. That can be, doesn't have to be, but can be an issue in terms of, you can't really assess the quality of the person or the team raising funds if it's totally anonymous. But in that case, you kind of like address this issue by having, again, like a decentralized form of KYC, where this person doesn't disclose their identity to everyone, but still you can tell they're kind of KYC'd.
Yeah. So I think this is very important for making sure that this actually works both compliantly but also in a Web3 native way. So anyone that goes through the KYC process will, you decide to give your information to a trusted third party. So let's say in this case for the KYC credential that is usable on Polimec, that will be Deloitte. Yeah. So you can assess, do I trust Deloitte to hold my information? So once you have that, then you get a DID and a credential, and with that you are a synonymous participant on the network. So you do not have to actually disclose who you are. You can stay synonymous behind your NFT or whatever you prefer. Of course, that comes with the problem, as you say, of like, it might be difficult to assess who the people are. Is it something that I want to invest in, right, or participate in the fundraise? And I think that's up to the project to decide what do they need to actually disclose to make sure that that the participants actually evaluate the project correctly and actually want to participate in the project. But you still have an on-chain proof that at least Deloitte knows who the people are. So you don't necessarily know exactly who they are, but you know that they have actually disclosed themselves to Deloitte, and that you can provenly say that they went through KYC. They do have an entity that is the entity that is raising funds. So you have the possibility of, let's say, you can have the problem of a lot of people raising funds, and then all of a sudden they just run away with all the funds. At least here you have the accountability that you have to trace back of who is actually raising the funds, and that it goes into to an entity that has been in this case KYB, because it's know your business when it's a company doing it, and that you have that record with Deloitte, and that you have the proven KYC on chain as well.
Right. Thank you for clarifying this. All right, let's get to the next step you were saying.
Because then we talked a bit about the evaluation of figuring out, is this a good project or not? Because when you're a permissionless protocol, then anyone could go in and use it to raise funds. It could be good project, bad projects, or anything in the middle, right? So we need to have a way of figuring out, how do you make sure that when you actually get to the actual fundraise of a project, that you have a proper evaluation of if it's a good project or not. Mm-hmm. And that's where we invite any crypto user to go in and actually do an evaluation of the project, both in the terms of bonding tokens, so there is a financial incentive to do the evaluation, but also to actually make a written statement on, do they think it's a good project, why or not, or if they think there is a problem, then also go in and actually describe that, because it gives information to anyone that actually wants to be a part of the project of what works, what doesn't work, what are any concerns that there might be. Mm-hmm. And that's a 28-day period for any project raising funds over Polimec. So if the project gets enough backing in the evaluation phase, then it moves on to the actual fundraising phase. And the fundraising phase for us is basically split in two different rounds. So we have what we call an auction round, and then we have what we call a community round. And the auction round is specifically for institutionals and professional investors. Mm-hmm. And it's a 5-day period where the price, there is a floor price set by the project, and then the institutionals and the professionals are bidding for getting a ticket in the sale. Mm-hmm. The project themselves can decide how much is available for the institutionals and the professionals, and how much should be available for the community round later on. But in the auction round, the different participants are bidding against each other, so that you get a price discovery of the project raising funds. So you can't go below their minimum, but if there's more interest for the project, then there is available tokens in that round, then the price will obviously go higher. Mm-hmm. When that auction round concludes after 5 days, then we go into the community round, where anyone can participate. So that will be institutionals, it will be professionals, but most importantly, the retail users as well. And the most important thing about the community round is that in the community round, the participants will participate for weighted average price of the result of the auction round. So by that, we make sure that anyone that participates in the community round will actually participate on similar terms to the VCs and the institutionals and the professionals, but usually with a smaller ticket size than what you would expect with institutionals or professionals.
Mm. Is it like a maximum ticket size per person then, or what?
It's completely configurable with the project raising funds, so they can decide that there is the same ticket size for everyone, or they can have different ticket sizes in different rounds, or different ticket sizes depending on the type of participant that you are on the platform. Mm-hmm. So it's fully customizable to make sure that it actually fits to the goals of the project raising funds. Mm-hmm. Because it could also be any time in the project lifecycle, right? It could be a pre-seed round, or it could be a seed round, or it could be Series A, or similar things like that, where you basically can go in and you can fundraise from a global community very, very early on, so that you actually build up that community feeling early on for your project as well. Mm-hmm. Gotcha. What we then do after the fundraising round is that the next problem that there is in blockchain and crypto, that if you have participated in especially these very early stage fundraisers, usually you do a lot of paper back and forth, maybe sometimes on emails or on Telegram or something, and then you get some kind of piece of paper that shows like, yes, I invested in something, and then you cross your fingers and hope that you'll get something back at some point. So we also don't think that necessarily is the best way of doing it. So what we're doing is that once the fundraising concludes, then we will be minting what we call contribution tokens that represents the participation you just had in the fundraising round. And those contribution tokens will then, when the project goes mainnet live, then those contribution tokens would automatically be morphed into the mainnet tokens. So no more of all these tedious claiming processes or similar stuff of like, how do I get the tokens that I bought like 2 years ago? Here it happens fully automated, and that for the end user, they will just get the final token in the end. But until they get the final mainnet token, they still have a proof of their participation directly via the contribution tokens in their wallet.
Right. Okay. Let's pause there because I have a lot of questions. So one would be, with what coins can you invest in a fundraise, and on what blockchain then?
So initially, we're looking at that. It's up to the project as such. What tokens they will actually accept. What we are envisioning right now is that you participate with stablecoins, because you're participating in early stage fundraisers. It's usually a highly volatile market, so you don't necessarily want to invest with another volatile token. So on there, we are looking at integrating USDT and USDC directly, so that when you actually participate, you participate with stablecoins. But of course, there could be other things, like we are launching as a Polkadot parachain, so obviously dots could also be something that people would like to participate with. But in the end, it's up to the project actually doing the fundraise.
And on what blockchain would you have to contribute those stable coins?
So currently, it will be on Polkadot. So we won our parachain slot a couple of weeks ago. So I think now we had it for 2 days. We don't have anything running yet, but we have the slot. Yeah. And then we're looking at how do we actually also integrate and bridge out to other ecosystems. So definitely looking at the trustless bridge to Ethereum. I think Snowfork is now looking at. I think we're getting beefy on Polkadot very soon. So hopefully we can have the direct bridge to Ethereum, but definitely also to other substrate based chains as well, and then see how we can also branch out to other ecosystems as well. Because for us, it's like, this is the main ethos of Polkadot. We want to be interoperable, not just interoperable with anything on Polkadot, but also interoperable outside of the ecosystem. Because in the end, builders should build where they think they have the right infrastructure to what they want to build, and then we should be able to support that with the fundraising need for those projects.
Right. Okay, interesting. And with the stablecoin on Polkadot, then just to go more in detail, is it then on the Polkadot Asset Hub that you would contribute, or would it be the abridged version to Polimec where you would contribute, or?
Yeah, it's actually something that we're looking at right now of how you actually do it the best way. But as such, well, as soon as you have your stablecoins on Asset Hub, that's sort of the way in, right? And then you could basically move those tokens over to Polimec and participate from there. So that goes into, I think we talked a bit about user experience and user interfaces in crypto. So this is one of the things that we're very much looking at right now, of how do we make this a seamless experience, so that if you want to participate, fine, you have some Polimec tokens, so you can participate. And it's like, hey, I need to invest with USDT. So you can go on Binance, buy Polkadot native USDT, get them to Asset Hub, and then basically you access the Polimec app, and then we take you through all the steps that is necessary there. So what we're looking at is actually building everything into the Polimec app, so that for the end user, it's a complete seamless experience, and something that should be very easy to use for anyone.
Right. Okay. That's. I thought you would be focusing on how to make that more seamless.
Definitely.
And just a comment, that's not a question. I like the fact that how you're addressing the fairness aspect between the institutional investor and the retail investor, so to say, where you have They are in the auction phase, the institutional investors, and then you make a weight-based average of the price that they bought at, and that is the price for the community, for the retail investor investing. Is that correct?
That's fully correct. I think it's the way to do it, because like there needs to be I think what we saw in 2017 on ICOs and these things is that maybe retail users are not the best to determine what things should cost. I think there's also evidence to maybe the fact that maybe VCs are not the ones to say how much things should cost either. But
FTX.
but in the end, you can say the professional participants should be the ones that they are the ones that are investing the most likely the largest amounts. Yeah. So they should figure out what things are costing, but that should also be reflected that if you as a retail investor invest at the same time, then why shouldn't you get a fair participation together with them at that point?
Yeah, that's totally makes sense. And another thing I wanted to ask was about the evaluation part of it, where I could come in and say, hey, I'll evaluate this project trying to raise funds on Polimec, and hopefully I get rewarded for it. I just want to understand that more in terms of you earn rewards for successful evaluations, or you get slashed for unsuccessful ones. Like, what constitutes a successful evaluation? An evaluation might not be favorable. Is that not successful, or who evaluates the evaluation here? What's the mechanism?
Yeah. So several ways we are tackling that fact. So when you do an evaluation, so let's say a project wants to raise $1 million, then for the project to have a successful evaluation, they need to have 10% of the funds they want to raise locked in Polimec tokens as supportive evaluations. So what you then do if you are supportive of a project, you can then basically stake your Polimec tokens in support of the project. So the value of your Polimec tokens will count towards that 10% goal of the funds they want to raise. Mm-hmm. If then the project can raise the $1 million that they are aiming for, or more, so let's say the valuation goes up, then the evaluation is deemed successful. Mm-hmm. And that means that then you will get rewarded with tokens in the project that you evaluated. So what you will actually get a 30% return in the contribution token of the project. Plus, of course, you get your staked Polimec tokens back again. Mm-hmm. So if you get it wrong, and let's say the project that doesn't manage to do a successful fundraising round, then we will take away 20% of the value of your Polimec tokens. Mm. So you should only do an evaluation if you think the project is going to succeed. If you think there's a problem with the project, then you can always make a written due diligence and upload that to the Polimec app. So you have a way of being of alerting users to that as well. But if you are not in support of the project, then you wouldn't need to bond tokens for that.
Okay, that's what I was wondering. Okay, so because if the success is only coupled to if they can raise, like you could still write it could still be a valid risk that you point out in the due diligence. And they might still be, as you said, there's irrational investors in this market. They might still be able to raise. But if you point out, if your evaluation is like negative, then you shouldn't bond your tokens. You just put it up there, or what was it?
Yeah, then you can basically make a comment on the app showing that, hey, I think there's this and this problem with the project.
And then the rest of the community can actually upvote or downvote your comments if they agree or disagree with the written statement that you made. But the incentivized token mechanism of doing evaluation is only in a way of, if you are supportive of the project, then you will bond tokens in support of the project. But and if they're unsuccessful, then the tokens will be slashed. But if successful, then you get a reward on it.
Okay. So, right. Okay. So you bond tokens. You write the evaluation, and essentially you get the return if the project is successful in raising funds. If they're not successful in raising funds, you'll get slashed. You lose. How much was it?
You lose 20% of the funds that you put forward. So you can say, if you're successful, you get a 30% return. If you're unsuccessful, then you will get a 20% loss on it.
Okay. So let's say, so in terms of, let's say I start making an evaluation for a project, like I start working on the due diligence. So if I should notice throughout it that this is not something where I would bet on this project being able to raise the funds, then I would essentially not continue, or?
Yeah, then either you would make like a statement saying that I think there are certain problems with this project, so I would not be in support of it. And then other users will be able to see that and make up their minds if that comment is useful for them or not.
Right. Okay.
So it's more a matter of making sure that, because it's a permissionless system, so you need to make sure that it's properly incentivized to have the ones that are really interested in the project. They can actually make a gain on it, but you also don't have like let's say a competitor to a project that wants to raise funds go in and say no, this is the worst project ever, and then bond a lot of tokens for it, and then they end up being the ones that are as a result, then they won't be able to utilize the platform. So for us, it's more of, there is a positive saying, yes, I think this project is going to be successful, then you're rewarded for it. But we also make it possible that you can make comments saying that I don't think this is something that you should that should go forward.
Okay. I'm not sure if you would call it game theory, but there's a lot of aspects to this wheel getting to turn, as in you need liquidity for this to work, right? So like the project needs to have a realistic possibility of raising those funds, for the project being able to raise funds, but also for the evaluators to get their money, which means for the evaluator community to thrive. That there's like different sides to that market. You need the evaluators, and you need the projects to raise funds. You also need the participants to invest. You kind of need to stimulate that whole thing. What do you think about that notion, so to say?
No, I think it's very true, and I think it's one of these things when you look at it is, I think raising funds is not something that you should do lightheartedly, right? Mm-hmm. I think you are, as a project, you go out and you ask a participant to fund your project. I think hopefully you have a good project and you have the right intentions with the project. So it shouldn't be easy to go through, but of course there should be a way of doing it. So I think it's okay that you need to make sure that you have enough community support to actually do it. And one of the things that we also have with Polimec is that we are already having quite a large community and an ambassadors program live, so that we know that once we are live with the Polimec protocol later this year, early next year, that we then have
initial set of participants that will participate and understand the protocol and can actually go out and talk to their community about it and explain what they can do by participating on Polimec. So it's definitely a way of building up a large community around the protocol and make sure that you have the right actors involved from the beginning. But I think that is something that is essential to have there, so that it's not like anyone can go in and raise funds, because that's also where you have the risk that maybe you have projects that doesn't have the right intentions will raise funds and then basically run away with the funds. So I think it's essential that you have the community to be able to say, yes, this is good, or this is bad, and it's also not something that we say as a project team what is a good project or not, because we don't know. And that also gives the wrong incentives, because I think we've seen that in a lot of cases with like launch pads or things like that, where it's always a bit unclear of like what is the is the right incentives there to make sure that yes, this is actually something that you should invest in, or is it something that someone is just pushing because it's like what are the incentives behind it? And that's what we want to make sure, that by doing it as a completely decentralized protocol, that we've actually built in the right mechanisms to make sure that you can do a fair and unbiased fundraise for projects using Polimec. Right.
I think that's a super cool idea, the way you're implementing this and also integrating these these use cases, which are in and of itself super interesting, like decentralized identity and things like that. I think it might be a challenge to bootstrap this whole ecosystem, like I said, with the different participants in this market environment. But I think it's a very valuable thing to do. And in terms of the projects, two questions. One is how can people get involved, like the different actors, like evaluators and investors, but also the projects that want to raise funds. And then the second question was what types of projects are these? Like the launch, then does it have to be like a parachain that is then connected to Polkadot, or can it be just a decentralized application living on chain XYZ?
Yeah. So to take the last thing first, I think it can be any project, as long as it's, let's say that you're doing right now is like we're looking at it as a version 1.0, that it's a token-based fundraise, because that makes sure that you can do everything completely decentralized and anything can run directly on the platform without any intervention from a specific group of people. So I think that part is really, really key. And as such, it doesn't really matter if they're a parachain, if they're running as a dApp, or any other way, as long as it's and as the fundraise is doing is performed as a token-based fundraise. Right.
That means the project has a token that is.
Yeah. Because as such, you can say if you invest in a project, either you end up with either you get a token-based fundraise or you get an equity-based fundraise. And the problem by doing an equity-based fundraise, and we're looking into how we can potentially do it in the future, but doing equity raises, you need to have lawyers and all kinds of things involved to make sure that you have the right registration of the equity that you actually are getting, where the tokens is something that you can have trustlessly on chain instead. So it's an easier path to do it on the tokens, but looking at how we can also do equity going forward, if that's what the projects actually prefer to do. So definitely looking at how to do that and make it available for anyone on Polkadot and as a Polkadot parachain, or building on any Polkadot parachain in the beginning, branching out to other substrate-based chains as well. We are already in talk with a few that are maybe not directly on Polkadot, but our substrate-based chains as well. And then looking at also how can we bridge also outside of the Polkadot ecosystem once the trustless bridging solution is in place.
Okay. All right. And what about in terms of the other question, which was how can people get involved, like the different types of actors on Polimec then, the evaluators and the projects that want to raise funds, and also the people who want to invest into projects?
Yeah. So it's actually like onboarding process is extremely simple. And what you do to be able to interact on Polimec is that you need to have a credential issued by a credential provider that is accepted by the Polimec blockchain. So as we speak right now, this is Deloitte. So what you do is that you go to the Deloitte website, you obtain a credential either as a legal entity or as a person, and once you have that, then you can go to the Polimec app. And then you can connect and you can see any project that is actually fundraising, if it's under evaluation, if you want to evaluate, or if it's in the fundraising round, then you can participate with USDT, USDC, or any other token that the project is looking for. If you want to be even more involved, then we also have our ambassadors program that is open for anyone that's interested in the early stage startup environment in Polimec or in Polkadot in general. So say reach out to our ambassador team and see what are the opportunities there as well. That is definitely something that is a potential to be a part of it as well. And if you are out there for raising funds, then reach out to the Polimec team directly, me or Luca or the rest of the team. Also, try out the app, try out the network once we are live. But we are also more than happy to have discussions with teams that are thinking about doing something. What can they do? What could they potentially use Polimec for? When are we live? And so on. So definitely reach out to us via the ways to contact we have on our website. And if you are just more want to be updated of what goes on, then we also have a newsletter that you can sign up for on our website. Then you get all the information there as well. But definitely good to keep an eye open. We're getting close to launch, so there's a lot of moving parts and a lot of things is happening. So definitely good to keep updated.
Okay, yeah, we'll put all these links in the show notes for people to find.
Yeah.
So when is the launch going to be? Any update on that?
It's blockchain, so it will be soon. No, we do expect it to be as we have on our roadmap. Should be late this year, potentially early next year with the full functionality of it. But as we now have our parachain slot, then we are getting very, very close to have everything ready, and with the Deloitte credentials being available as well for anyone to obtain, then I think the best way to be ready to utilize Polimec once we're live is to already now go to Deloitte and looking at how to actually get a credential. And the credential is valid for a full 12 months. So it's just a matter of when you have it, then you have the opportunity to connect with the chain and then participate that way.
Okay, yeah, we put that in the show notes as well. It's an exciting time. Just Definitely. To expand on this part, you guys are building on Polkadot. You chose Polkadot. Why Polkadot? And it also seems to me a bit like this business model working. It's crucial for it to work. It's crucial that you guys built on Polkadot and are using all its features. And I would just like to get a better grasp on it.
Yeah. No, it's like I got this question a lot. And I think it goes into where do you have the right tech to build what it is that you need to build.
Yeah.
And for us, looking at the technology on Polkadot and what you actually have of possibilities is something that enables us to build Polimec as we have it now. Mm-hmm. And we don't see any other tech that we could have built the same technology that we have now on Polimec. Mm-hmm. So they're definitely having the substrate framework and make sure that everything is actually that you don't have to deal with the whole security guarantees and the validator setup and so on, because that comes out of the box on Polkadot, is something that's really, really second to none. Then it comes into the how do people participate, and they're looking at what Polkadot is Polkadot is interoperability at its core. There's a lot of great projects on Polkadot. I think the ecosystem is very open to collaboration between the different teams. I think as we talked about, we are already collaborating quite well with Kilt and have ongoing discussions with a lot of other teams in the ecosystem to figure out how can we work together to create a better experience for the user. So I think that's really core to what it is like to build a product on Polkadot. Then it's then we need to figure out how do we get how do we maintain giving a good access to the end user. And of course there's other ecosystems of like Ethereum obviously has more users than what you see on Polkadot, but I think one of the with the promises of the trustless bridging on Polkadot, then we can tap into those ecosystems, but we still have all the benefits of being able to use Substrate, being able to abstract away a lot of the problems that you see in a lot of other protocols. We're looking at a lot of different ways of making it easier to participate, of like how do we abstract away a lot of transaction fees, and how do you make sure that you don't need to have a lot of different tokens to participate. And that, by building on Polkadot, is something that we are in full control over. So there, I think we can build a much better product on Polkadot, and then make sure that anyone can interact with it also from other ecosystems.
Right. Yeah, it's good to hear that you have this kind of like product and UX focus to simplify. You're using all these technical capabilities of Polkadot, but at the same time you're thinking about how to simplify it for the user to make it more streamlined. Yeah. And I think that's the way to go. And that's exciting. I'm excited to see where things go for you guys once you launch and all that.
We are as well.
yeah, I imagine. We'll keep a close eye on this. Just to wrap this up, I had one more question for you, as in, obviously we're talking about fundraising here. So I thought it would be interesting to talk about what advice, especially as you have a financial background, you've been CFO of the Web3 Foundation, a key player in the Polkadot ecosystem. What advice would you have for projects, teams, companies in the cryptocurrency space from a financial standpoint? We are in a challenging market environment right now, in a bear market, so to say. There's teams running out of runway. That's not uncommon. And in bull markets, on the other side, you have teams often raising at insane valuations, and you got tokenized business models, which we've seen thus far are often not sustainable and yet highly valued. Pre-product market fit raises are made and all these things. What advice do you have for projects in terms of these points? Yeah,
I think that could be a long discussion. But no, I think a few key points for me is, well, first of all, community is at the core of building a Web3 product. So when looking at actually building anything, figure out where is the community for what you're building and how to actually engage with the community and involve the community early on. And that also goes a bit into a lot of the fundraising discussions and so on. Like, I think it's one of these things that
a lot of founders, and I've done that mistake multiple times, but you don't want to tell anyone about what you're doing because maybe they're going to run away with your idea. And the good thing about blockchain and crypto in a way is like, hey, there's full transparency. You should put it out there and be confident enough in that actually the idea that you have is so good and that you are the right one with the team to actually implement that idea. And sharing it with others is probably a good thing, rather than to keep it very close and say, I don't want to tell anyone about my product before it's out there. Because that goes a bit into this, like, okay, so I just want to talk to VCs, and then I get money, and then I build everything, and then I do like, bang, launch, and now then all the users will come. And for me, like, the users won't just come because you just launch it and now it's here. I think that getting the users and getting the community around your product is key to build up from the beginning, and how to get those ones along on the user journey of your product. And I think that counts both for bull markets or bear markets. I think if you have a product that you think can only get funding during a bull market, then maybe you should rethink the product a bit, because we, at least historically speaking, then crypto is a very sort of, it goes up and it goes down. And if there's a bull market, then there will also be a next bear market, right? That's the way we've seen it so far. So resilient business models that actually works in both bull markets and bear markets, I think are extremely important. And then go out and do fundraisers on when you actually need the funds. It's not like you just have to do one fundraise and then you have funds for the next 4 years. That might work at the height of a bull market, but in the end, it's like, you need to make sure, how do you get the right ones in? How do you get the right stakeholders into your product? Because they are also the ones that you're going to that are going to make sure that you have a successful product. And these are the ones that are going to be your early backers. So allowing those in early on, I think is something that's actually quite key, irrespective of where you are in the market. Probably even in a bull market, probably more important to make sure that you get the right ones in that wants to get into your product for the product, and not for just because when everything goes up, then everything goes up. But that's probably the wrong reasons, right?
Yeah. Okay. Yeah, you heard it here. Community is key.
Definitely, that's key. And then of course the compliance angle is like, crypto is growing up, blockchain is growing up. I think we have a lot of very, very good technological solutions to tackle a lot of the problems that we see in Web2 or in the current financial world, that if we can implement it the right way, can actually make life a lot better for anyone utilizing Web3 products. And something where, like, all these trust-based businesses that we see today, I think crypto and blockchain has the technology to actually disrupt these ones. But we need to be serious about it. And when we call something decentralized, then it should be decentralized and not decentralized in the way of like, everybody calls it decentralized, so it's also decentralized. But then you have a 6 out of 9 multi-sig or something like that managing everything. Like that I think is key. Just having that in mind of that you're building it for the right reasons, and that you're building something that actually disrupts the current trust-based models, and that you have something that's properly decentralized.
Yeah, right. And it shouldn't just be about it's decentralized. It should be useful. It should be a useful product that people want to use.
Definitely. I think that's the only way that you build something that is sustainable over the long term, right? It should be something that people like to use and want to use and can see that they actually get something out of using.
Yeah. Right. Thank you so much, Kasper. That was very insightful. I'm excited for this to be published. We'll put all the things you mentioned, all the ways to get in touch with the team or to get started with Polimec or with the Deloitte KYC. We'll put all that in the show notes so people can get started. And thank you so much for coming on the show.
Thanks for having me.
Let's stay in touch, and I hope to see you soon.
Definitely. Likewise.
Bye.